Okay. Hello. Hope everyone's having a good day. My throat is clogged. I don't know what my throat is clogged with. I'm eating a Halls right now. I haven't had a Halls in like years. I don't know what caught my throat, but it's a little hard to talk. I'm not going to lie. I tried to record a YouTube video before this on the new Palantir deal, and I couldn't get through it. But we're going to try to get through this. My throat is hurting, not going to lie. But the market has to open. It doesn't matter if your throat is hurting or not. There is a market, and the market requires opening. So regardless of how I feel, it doesn't matter because the market needs to open. So we're going to open the market, especially on a day where the market's relatively up, not horrible, but also not bad. Let me just put this in my Discord, and we're going to get started with talking about the market. Oh boy, my throat. I don't even know what I did, bro. I feel like some cold air just caught me or something because I'm just like, I'm confused why it's happening. But Nerd Chat, good morning. Marco, good morning. Uriel, Cameron Investing, Paul, all right, I made a shout out from Ireland. Bro, Dublin, I want to go there one day. Dublin looks so cool. It's like a dope place. I don't know if you're in Dublin, but I want to check it out. Good afternoon from Laos. That's amazing. That's awesome. Shout out to you, Oscar, or Oscar. Mark the golf out of you. Now look like a child. Happy to see the beard. Yo, the beard is coming back, right? It's coming back. I don't think I'm gonna grow it out as big as I did but last time, but let's see what it is. Arshad, Oriello, Felicia. Sounds like strep throat. Probably, bro. It was like I tried to make a video right before this, and I just couldn't talk. I couldn't do it. F Dublin, come to Cork. Okay, I don't know any of the other ones. All right, let's go into Webull. Here we go. Let's pull it up. What do we have on Webull? What do we got? So Palantir has a new deal. I'll talk about that in a little bit. Gargle salt water. That's a good idea. For some reason, I didn't do that last night, even though I used to do that all the time when I was little. That's a good idea. I should probably do that. Netflix at 315 or 310 pre-market. Palantir at 650. Apple 130. Tesla maintaining its ability to be up at 120.93. Now, I am probably going to buy or sell 3 cash secured puts on SOFI today at a $4 strike price, expiring March 17th. And I will be locking up $1,200 in collateral to get $72 in premium, which is 6% on my money. So in 2 months, not bad. I mean, it's not horrible. So that one is looking pretty juicy to me. I've been looking to start solidifying a little bit more on the SOFI position, but I just haven't bought that many shares. So I'm like, instead of buying the shares, let me just get some premium. And if it does go below 4, then it'll just execute and we'll get some shares on that. Let's go to SOFI right now. Actually, SOFI has been stuck around 460 to 480. Been doing nice in the 480 range. I think the reverse split concerns are a little, I don't know, with Noto buying as much as he did, I think it's hard to imagine they do a reverse split. If it falls down to 3, I mean, that would be pretty nice, just in terms of a buying opportunity, but it's hard to imagine that. Now, earnings, I don't know if they're going to be amazing. They kicked the last earnings out of the park. If they're not amazing, then we're going to get a little bit lower. If they are amazing, then, hopefully it'll stabilize at this price. Amid thoughts on Tesla. I'm actually releasing a video from the Finance Junkies. We did a clip of us talking about Tesla. I agree with Chris on this one, which is that let me wait for the numbers, which answers the next question from Matt. How are you buying SoFi but won't buy Tesla on this rare buying opportunity? I feel like let me wait for the numbers. Let's see the numbers on earnings. Let's just see what's going on. The reason I don't want to buy Tesla necessarily right now is also because there is no reason the market should be up right now. So let's go to the S&P. Can anyone logically tell me why the S&P should be at 387 and not 340 right now, given everything that's going on? There's not that many logical reasons, right? We don't have the hard landing that the Fed basically has said implicitly and explicitly they want us to have. So if that's the case, I don't think Tesla survives at 120 if the S&P starts to drop down lower. Now, the argument is, well, like DCA. Well, then there's some other concerns going on around Tesla, especially around demand, competition, etc. And I just want to see what the numbers look like on earnings. I think that's pretty reasonable. And if it goes up to 130, 140, and I want to buy the dip then, well, it's already down from 400. So it's not that different from buying it at 120. But 120 to 80 is a little bit more of a difference, I feel. And that would happen if the entire macro starts to plunge. Mind you, I have been buying the dip. I bought the dip at 184, bought the dip at 178, bought the dip at 158. So it's not like I haven't bought the freaking dip on Tesla. It's just like at some level, you're like, no, I will wait till the numbers come out because I'm not going to keep buying the dip and then you just keep falling. Like, it's just not going to happen. SoFi is at a level where I think it is so depressed that I mean, yes, there is more downside maybe, but the downside to Tesla is obvious. We saw it go down to 102. SoFi has been kind of stuck at 460, 450 for a while. It just needs a catalyst to move up. I don't think it needs that much to go back down in the same way. S&P 500 up. Shout out to LWT in the chat because Biden is doing an amazing job. You know, that's probably a good point. Biden is doing an amazing job. Tesla is going. So LWT is more of a bear when it comes to Tesla. Tesla is going down to sub 80. Well, I mean, look, if the S&P drops and the entire market drops, you can't imagine Tesla not going down to sub 80. And we saw them go down, right? Like we saw it happen. So I think I'm also very skeptical. We're going to listen to Tom Lee in a little bit because he thinks stocks can rally more than 20% this year. Granted, he said the S&P would end at 4,400 in 2022. So it'll be interesting to see that perspective. But there is no reason for the market to be up. There's nothing. Now, okay, so I guess inflation going down to like 6.5, 6.6, maybe 6.7 on Thursday might be a catalyst. But I don't think that solves all of our issues. Now, if we go from 6.5 to 5% inflation, I think now the market can be a little bit more forward-looking. I think 6% is still pretty bad. I think 5 is psychologically like very valuable to a lot of people. But we'll see. I mean, it'll be hard to get down from 7.1 to 5 in the next couple of months. Still don't see the upside for SoFi. It's a bank that parades itself as a tech company while making most of its money banking. Chris, you just don't know how to listen. I don't know how many podcasts we need to do for you to understand the bull case on SoFi. But it's okay. Because at $4, if you don't see SoFi as undervalued, that's fine. You can, you can keep buying Snowflake and hope that Snowflake gives you some valuation. Like Chris, I know you're not a value investor per se. I know you're not a growth investor per se, but I feel like you can see things when they're undervalued. Now, if you just look at the growth and look at the last podcast we did in 2023 on SoFi Weekly, Tanner went through like 18 different metrics that they're growing double digits, if not triple digits year over year. I mean, at some level, you have to see that something. And then just Noto buying. I mean, like, there's a lot of things to get into on SoFi, but it's exciting to me. It's really exciting, especially from the Galileo perspective. And at 480, I feel like the risk reward is that I don't think the company's going bankrupt. I mean, what, it goes to $2? Like, is that like, it goes to a price of sales of 1 when it's a price of sales at 2.7 right now? I don't know. It's just hard for me to imagine that. Like, when there's a problem with a thesis with like Netflix and Spotify, I can understand. I don't think there's a problem with the thesis for SoFi. I think it's just a question of them executing, being able to continue growing. All right, here we go. 9:30, January 10th, 2023. My throat is broken, but the stock market is open. That rhymed, kind of. Wake your ass up. Here we go. The stock market in 2023 is now open. Here we go. Bitcoin, 17,280. It has gone up a little bit since yesterday, up about 2%. Tesla, 120. Netflix, 313. Coin. Oh, by the way, Coinbase slashing 20% of its workforce. This is after this was after a 20% slash in July. They're doing another 20% slash. That's why they're up right now, 1.62%, because they're getting rid of costs. Remember the problem with Coinbase, okay? They make money off the fees of trading Bitcoin, and they don't take a flat fee. They take a fee that is contextual to the price of Bitcoin. So if Bitcoin is $2, and Coinbase takes a 0.5% fee or whatever, or I think 5%, whatever it is, they get 5% of the $2 transaction. If Bitcoin is $75,000, obviously that 5% is worth a lot more. So the price of Bitcoin is 1,000% positively correlated with the price of Coinbase because it's based on transaction volume. Same thing with Ethereum and all the other cryptos. So if Bitcoin doesn't moon, Coinbase doesn't moon, but Coinbase is one of the most secure, in quotation marks I'm putting, because I hope it's as secure as they say that it is, wallets compared to the others. So it is up 4% on employee cuts. Netflix 314, Palantir 655. We'll get into the Palantir deal in a second. Apple 130, NASDAQ 627. Nice little rebound from yesterday. Roku 45. Also, we have earnings that are starting next week. Netflix Jan 13th, or sorry, Jan 19th will be out. I'll probably be live streaming the Netflix earnings. I'm like asking myself, do I want to buy puts before it? And I don't want to, because what if they grow? But like long term, I'm just not thinking this business is valuable. But we will see. Meta at 128. I wouldn't buy puts on Meta. Enphase 229. DNA 156. CRISPR 47. A lot of people have asking, what's the right time to get into Ginkgo? Look, I am incredibly bullish on Ginkgo's business model. I would want to wait another quarter to see the numbers. If you don't like Ginkgo because it's in the biotech space, that's fine. That's ideological. But if you actually look into what Ginkgo is doing business-wise, I think it's phenomenal. The problem is they just diluted shareholders by 100 million, and they have 1.3 billion in the bank. That I didn't understand. They announced a nice partnership yesterday, and earnings revenue was pretty bad last quarter. So I would want to see another quarter. It could get to the point where Ginkgo goes to like 120, 115, and then it's like really exciting because it's like you're picking up something that could, even if it goes to $5, you 5x'd, right? And to get back to $5, I don't think is that crazy when the bull market comes into play. But I want to see the numbers. I want to see. Robinhood has the infrastructure and is the main comp to Coinbase, even if you're just trading. I agree. Yeah. I use Robinhood every day, and it's a great comparison to it. Okay, let's get into the Palantir deal real quick. I'm not going to go super in depth on it. I was trying to make a video about it, and I literally couldn't talk, bro. Like, I feel a little bit better now, so I think I can make that video. But it's the second PR this week, and it's with Cloudflare. So for those that don't know what Cloudflare is, it's an IT services management company. They help a lot of different customers and clients manage their data in the cloud. So the Palantir announced a strategic partnership with Cloudflare focused on cloud cost optimization. What cloud cost optimization means from my perspective is, so for example, we use AWS in my startup, and we pay a certain amount per month. Now ours is like $200-300, right? At one point, if we become really big, that will be like a couple $1 million a month. So how do we optimize the costs for what we're paying to AWS in a sophisticated way so that we're not paying server fees for no reason? So like Netflix that pays God knows how much money to AWS because they run on top of their servers. How, them strategically managing their costs is something where like a Cloudflare company would come in to help them. So understanding cloud spend is complex, especially in environments where customers use multiple cloud vendors, which is true. A lot of customers don't just use one, AWS, Azure, or GCP. As organizations transition more of their workloads to the cloud, the complexity and cost of these workloads have increased. What's more, organizations often struggle to achieve granular visibility over their cloud spend, meaning like what exactly am I spending my money on? Increasingly, an ability to easily manage cloud costs. Internal stakeholders range from finance executives to infrastructure engineers need to securely collaborate on optimizations and analyses to create lasting cloud efficiencies. So it's a really neat partnership that Palantir is working with these people as well. It's a CDN, Cloud Delivery Network. Yep. Stitching together a patchwork of cloud contracts and evaluating them across workflows and internal stakeholders is fundamentally a data integration challenge, says Shyam Sankar, COO. Our partnership with Cloudflare provides an avenue for Palantir Foundry to drive down multi-cloud costs of Palantir Apollo to reduce the burden on DevOps and improve customers' gross margin, and Cloudflare to provide a modern cloud architecture that doesn't restrict customer choice and delivers meaningful cost savings. So by implementing Foundry, and this is the bull case for Palantir. It's like Foundry can do everything. Like, for lack of a better word, you can put it in healthcare, which is the PR we saw yesterday, in drug discovery. You can put it in oil and gas. Or you can put it into something where you can do a partnership with one of the leading cloud development networks and be able to decrease the amount of cloud spend, which is the goal of a Cloudflare integrated into an organization to determine your cloud costs and your cloud spend and your cloud management with Palantir. So Palantir Apollo, reducing the burden on DevOps, which is when they send updates over the cloud, and how much money does that cost to do that? And then the actual data integration, or like the ontology of looking at how much are we spending in every single granular sector of the business via Foundry, taking all that data, putting it into one place, and then telling you what to not spend money on or what to reduce on or how to cut different costs so you can spend less money on your cloud spend. It's like a superpower that you integrate into your business, and it tells you all the different ways you can do all these different things that can make your business more efficient and effective. And the question is, will every organization in the world need that? Cloud delivery. Sorry, I said cloud. Content delivery, not cloud delivery. Yes, content delivery. The other reason you're right, it's content delivery is because we use Cloudflare at my startup. So on Audia, when you have to load the thumbnails aren't loaded through the internal servers on S3 because that would take forever. So like the content, which is a thumbnail, needs to be loaded through something else. That's where we use Cloudflare to actually be able to deliver certain forms of content. Now we load the audio through S3 because it's just a little bit more easier based on how my CTO architected it. But when we were trying to load the thumbnails and the audio at the same time, it just like takes like a minute for it to load up. And it's like, if you go on YouTube and you press the buttons, like it's already there, right? So we use Cloudflare with us when it comes to delivering content. Command duty noob. But it's interesting because like right now, right, we're not doing that. Like Audia doesn't have 1 trillion active users, but when that happens, or when there's a lot more growth and there's a lot more people loading a lot more thumbnails, loading a lot more audio, we would need to be able to manage how much we're spending on AWS to be able to load all that content and to be able to load it effectively and efficiently. And if you have something like Palantir just telling you, hey, this is what you need to do, hey, this is what you not need to do, that's important. Gabe says, Chris, what do you know about buybacks, why a company does and what it means? That's a very random question, Gabe, but interesting question. Okay, let's get into CNBC and let's listen to Tom Lee give the bull case for stocks. 20% rally this year. Let's see why he thinks it's going to happen. Here we go.
Start this year, and my next guest calls this quote strong omen for the market. See stocks rallying 20% this year. Joining me now right here, Post 9, CNBC contributor Tom Lee of Fundstrat Global Advisors. Happy New Year. It's good to see you. Welcome back.
Great to see you, Scott.
So you were admittedly too bullish last year.
Yes.
You are, in a sense, doubling down on that. 20%? How?
Yes. Last year was a year where inflation shocked the markets in the first half. It's come off the boil since October, very soft. I mean, if December comes in the way we think, it's probably 2.6 annualized inflation now. And wages are coming off the boil, right? If we look at the employment report Friday, they're growing at 3.7, which is where they were before the pandemic. So the third thing that we think needs to happen is volatility needs to come down in the VIX. The bond market volatility is below its 200-day. If that happened in the VIX, we'd be at 17. And since 1950, following a negative year, if the VIX is lower on average than the prior year, we're up an average of 22%. So I think we're set up for a 20% year.
Even with the Fed speak, if it's not Kashkari, it's Esther George. If it's not Esther George, it's Bostic. Just to make, sure Bostic got his message across. He spoke late last week. He spoke again before the show today. I mean, these guys are talking and women are talking tough.
Yes, they're talking tough because they want financial conditions to stay tight. That's dollar, stocks, bonds. Everything's kind of easing. So they're probably a little worried and they want to be sure inflation is in fact dead. But I think one of the changes, especially since October, is that inflation's been undershooting. This Thursday will be very telling, but if CPI comes in at 0.2 core, below consensus again, that means the Fed's original projection of 4.8 on the PCE is 60 basis points too high, translating that over. And that means inflation is undershooting by a huge margin. The bond market is going to push the Fed to say February might be the last hike, and then after that is cuts.
I mean, but the Fed members themselves are not, drinking what the bond market's serving up, right? They keep talking as if they're, as I used the word with Leisman a little while ago, hell bent on getting to that plus 5%, however much over 5% we can argue about, but and then staying there for a while.
Yeah, I think that's because part of the Fed model is they're using a Phillips curve. And at the moment, they're focused on this services number, X housing, which has been inflationary, and their view is that it's driven by wages. But what is sort of not being captured at the moment is the goods have dropped so much, and wage inflation slowing, and housing, especially this week, looks like it's actually come off sharply. That the trajectory for core could be, we could be sort of annualizing close to 1% in the first half, and that's far below what the Fed. I think at that point, the Fed would have to sort of rethink its reaction.
And that's where we begin with our talk of the tape. A Bostic.
Okay, so Tom Lee's argument is really interesting. Let's get right back into the market here. I think his analysis on inflation is also very important. If we can get inflation down, S&P, by the way, up just a little bit at 388.09%. If we can get inflation down to the levels that we need it to be at around 6.5, it would be exciting. It would be exciting. Now, from that 6.5 to get down to 5.9, I think it's going to be the harder glut. But it would be interesting to see how it plays out. Let me actually just show you guys all the expectations as well. On Twitter, we had a list of banks and what they said for CPI expectations. All the big banks are, for some reason, saying that CPI will come in pretty low. Let me pull it up. And I mean, like, either they're doing it because they genuinely believe in that, or they want retail to buy so that they can sell. I mean, like, that's one potential element of how it would happen. But most of these banks are saying something to the extent of 6.4%. Let me try to see, where is that chart that I can pull up. I don't know if I'm in the Tom Lee camp. I think inflation is also, going to determine my thoughts on what Tom Lee says. But it would be hard to imagine stocks rallying 20% to end out the year unless inflation goes down as dramatically as it needs to go down. That's weird. I can't find that chart. Okay, I'll try to find that chart in a bit. But most banks, basically Credit Suisse, JP Morgan, Bank of America, all of them are saying under 6.6 to 6.4, around like that. So we will see how it turns out. That's gonna be Thursday morning. That's gonna be what, 8:30? That might be exciting to stream live and see kind of how it goes. All right, let's get back into Tesla. Gene from Loop. Tesla shares are undervalued. Let's listen to why.
Joining us right now to talk about the outlook for Twitter, or for Tesla and tech stocks, is Gene Munster, managing partner at Loop. And Gene, we saw this stock under some significant pressure. We've seen it come back a little bit. How are you feeling about things as we kick off the new year?
Becky, I am a long-term believer in Tesla. I think that the shares are undervalued. Near term, I would be cautious. I think that there's going to be some earnings pressure on this based on some of the discounting that has happened. And there is this bias when a stock is down as much as Tesla just to want to own it. I sense that too. We want to own it in our funds. We don't own it yet because we want to optimize that opportunity. And so the key here, of course, is we know the delivery numbers. We know the growth numbers. Up 31%. That was about a 2x what the overall industry growth rate was. Typically, Tesla grows at about 3 to 4x the industry. So some of that gap, that revenue growth gap, has closed. The delivery gap has closed. But again, I want to anchor back into what I think is going to be the A topic when they report on January 25th, which is going to be earnings. And just a quick math here, of course, they are discounting in China. They lowered prices by 13%. If you assume there is no other discounting across the globe when it comes to Tesla pricing, that would have a negative 15% impact on the March earnings. The street's looking for about $1.40 right now. If you start to factor in that there may be some further discounting, that number goes down. So I think that investors should generally expect about a 25% haircut to the March earnings. And that does not sound very optimistic from someone who's been bullish on Tesla for a long time. But I do want to underscore, I remain positive on this company. I think ultimately there are a few good reasons to own this in 2023, but I think that we can see some more pressure in the near term.
Gene, when did you sell Tesla shares, or you had them in your fund at one point?
We did. They basically tapped out on a market cap. It kind of blew through a market cap provision. So it was a long time ago, but we had owned it a lot lower. But as it went up, we had to sell based on some market cap. I think we had a maximum market cap in that fund of like 400 billion. So when it blew through that, we had a forced sell on it.
At 400 billion?
Yes, I think it
What
was.
did it go to? You didn't get, you didn't.
Yeah,
you
we
weren't there all the way up to
missed a
over
lot of
trillion?
the juice. We did,
What?
Joe. Yeah, we missed a lot of it. I think one of the challenges that with some of these funds is that these small and mid cap funds, they hold these companies until they're very big, and I think they lose some of their direction. And so we
You're
want to be
supposed to let your
true.
profits run and cut your losses, not cut your profits and let your losses run, right?
Well, in this case, we had some rules around the size of companies for being a small and mid cap company. When it blows through some of those targets,
Get rid of
just
that
to
rule.
maintain that.
Hey, Gene, go, keep going. Sorry.
No, I was just going to say, yeah, we just want to keep our products in line with our market cap provisions. So.
Okay. So obviously Gene has some reasons for why he is bullish on Tesla still. Miyoko, happy Tuesday. Thank you for being in the chat. Let's pull up Tesla right now. The argument he was saying about demand in China is interesting and slashing prices. Tesla down now about 1.5%. A little bit into the red. The argument about China is interesting because obviously we saw the numbers. BYD is doing phenomenally well in China. Warren Buffett actually started selling off a lot of his stake in BYD. He sold out another, I don't know how many shares. I want to say a couple million shares the other day, like yesterday. But maybe it's not as high as a million, but he started selling some more shares yesterday. Tesla slashing prices is about remaining competitive. Again, at the end of the day, if they can sell more units and more units get into the ecosystem, they have more of a chance to get more proprietary data based upon all the cameras recording all the footage they're getting. And it's interesting because in something like China, I might be miseducated about this, but they're allowed to have like footage of the cars driving through China, right? I feel like, I don't know if I'm making this up, but I feel like a long time ago, I read an article that says they're like not allowed to have cameras in their cars recording everything that's going on in China to fuel their AI algorithms for FSD, but I might be totally wrong on this. Nonetheless, if I am wrong on this, which I probably am, then Tesla's more cars in China means more potential for them to get full FSD and be able to navigate the streets and the highways of China, right? Which is different from navigating the streets and highways of San Francisco. Now, the reason I'm a little skeptical is because I don't know if the Chinese government would allow that. That's the only reason I'm skeptical about this. But if that's the case, then of course you have to slash prices because BYD is not going to be able to come up with something proprietary with FSD in comparison to something like Tesla in China. And that's why they would have to do this. 1 million shares, yes. Okay, so he sold 1 million shares. Makes sense. Gene said that yesterday Apple's a $250 stock. Yeah, and I disagree with Gene on Apple. I don't see the Apple thesis. The headsets coming in 2023, I really think this is one of those products that Apple's going to mess up on, not because it's Apple's fault, but because do you really imagine yourself putting on a headset every day? I just don't know, man. I don't know. It's hard for me to imagine. I believe they weren't allowed on military bases in China. That makes sense. See, that definitely makes sense. China, Tesla's not allowed on military bases there. China banned Chinese government personnel from driving Teslas into government military buildings. China shut FSD down in country a while back. Okay. So yeah, I feel like that makes sense because I don't think the government would be happy with doing that. Tesla cars have cameras around them and they're not allowed near Chinese military bases. Okay. So they have cameras, not allowed near Chinese military, makes sense. And I believe they have some version of FSD there. Or at least some version of gathering data and maybe coming up with FSD. I have to look into that. I haven't looked into this in a while. But like that, so my point is Tesla just needs to cut costs to keep selling more cars, because if they can do that, then obviously it fuels their ability to keep going in China. It used to be hard for people to envision carrying around a phone everywhere they go. Yeah, but Brian, come on, bro. Are you really going to wear a headset when you're walking to work? Like, I don't know, man. It's hard. It's hard for me to imagine it. It's just not. Maybe that's the problem here. It's hard for me to imagine it, but I just don't. I don't imagine it. I don't imagine it. It's hard. It's hard. So everyone who buys stocks supports planetary warfare. I mean, I hope not. I hope not. That wouldn't happen. It won't be a headset in 2 to 3 years, bro. What? It's gonna be glasses? I mean, like, look, I'm not saying that can't happen. I'm just a little skeptical on it. That's all. Just a little skeptical. This initial VR hardware will not be mobile. Yeah. I mean, like, look, let's go to Apple stock right now. Apple is at $180. They were at $129, so they broke 130. At $181 in January 2022, they were a $3 trillion company. They did $100 billion, they did $90 billion in revenue last quarter. That means they did $1 billion a day, because a quarter is 30 days, 90 divided by 30, which means $1 billion every single day. 90 days. So $90 billion divided by 90 days, $1 billion every single day. For them to beat that means they need to sell so many headsets and iPhones and justify the value proposition there and build an entire developer ecosystem building applications for that. What do you call it? For that headset app store. And that means people need to use it. And I don't know. I don't know what reason I would stay stuck in a headset and engage in some immersive experience. And that's the same problem with Meta. I'm not buying Meta because of the metaverse. I like Meta because of their ads business. So yeah, maybe they'll change it in the next couple of years, but I'm not sure. As the technology gets better and better and smaller, they will iterate and it'll be more and more acceptable. Again, maybe, but like, this is one of those things. Like, look at the Apple Watch. Is the Apple Watch that interesting? They made like 17 versions of it, and like, it's not that interesting. They sold a lot of it, but it's not that interesting. I think the headset could have the same destiny, bro. I don't know if the world is ready to wear a headset yet. Like, I just don't see it. It's not interesting to me. So if that's the case, I'm not sure. When is CPI? CPI is on Thursday. So we will see CPI on Thursday. What's going on? Someone should teach monkeys how to drive and see if they can do better than FSD in a few years. Bro, if a monkey could drive a car better than FSD, that'd be insane. Never thought I'd be listening to someone on YouTube talking about the stock market open with earbuds in my ears. Well, Heinz, you're doing it. I hope you are enjoying it to some extent. All right, I got to be out, guys. My throat, I would stay a little bit longer, but I got to give my throat a little bit of rest. I also have to go to the chiropractor after this ends, so I'll be doing that. Last day to invest in my startup, January 13th. I actually got off a call with a investor last night. We talked for about an hour. He's a California guy, tech dude. He's thinking of putting in some serious money. And so it was really nice to talk to him and get his thoughts and perspectives on it. And he sees the market opportunity pretty vastly. And so do I, to be honest. This is a question of if I can execute. This is not a question of if the market opportunity exists or not. The last day to invest is in 3 days. After that, we cannot accept any more funding. Link is in the description. Progress we've done is in the description. If you want to email me or get in contact or like hop on a phone call with me, please DM me on Twitter at @AdmitIsInvesting, and I'll be available all day today and tomorrow. But would probably have to invest within the next day or two, because after that, January 13th, it is completely done and it's over. Feel better, man. Thank you, Miyoko. How's your company different? Again, in the description, you can check out the video. It explains everything. If you click the link on WeFunder, it has a full 10-minute explanation about why we're different. There's a lot of stuff there. But if you want to personally talk to me, just DM me on Twitter and I'll give you an explanation. We can get on the phone, all that stuff. All right. That's it. Thank you, everybody. Hope you had a great day. I will see you tomorrow on the market open. Honey lemon tea. It's a good idea. I need to get into some honey lemon tea. Bye, everybody. Have a great day.